right here. So extreme POI mitigation, and today I'll just be using USD card. I will also be using trading view. So today, yeah, USD card, and today I'll be using a very complex trading range so that we get ourselves advanced a little, because it's not always that you'll get a clear chart. But obviously I usually recommend, like, when you see such a chart, like, which is was consolidating this way and everything is messy, you cannot identify anything, like, in that case I would just recommend you to go onto another pair. But of course, with due time you may need to practice and also learn how to identify correctly, like, these zones on such trading ranges. Like, how this trading range is, you can clearly see, like, it's very very hard to identify where the POI is, where the correct order flow is and stuff. But anyway, uh, we can clearly see that from this chart here, everything was clear, everything was seen, everything here, you can see inducement break, until we got onto this part. Now that's when price started to consolidate, like all of these, after it has taken out this major inducement. All right, this here is an inducement. You may think that this here is a change of character because there is a little pullback here, but this pullback, if I zoom, you can clearly see that this pullback is not valid. Right here you can see this candle, it's in between, it's engulfed here, like it didn't broke past any high or any low of this candle. So you can clearly see that yeah, this is a child candle, and then we get to this red candle that now breaks past this mother candle high, but the low is still maintained. If you still, like, if you still remember how we was identifying the valid pullbacks in a bullish scenario, then right here you can see this candle also was engulfed. So this is like this, and then this, and then these two candles, now they're the ones that created that pullback. And then after that, since this one here is the recently formed pullback in that range, so this means that this sell side liquidity is now the major inducement. Major because it occurred after the break of structure. So yeah, the major inducement is taken out, and we said that our low here needs to be protected. I mean, this low needs to be protected. So not until like anything that happens after that. So let me just use this one. So anything that happens in between from this low all the way to this high, anything that price does, we don't like, it doesn't matter as long as this low is protected and price reverses and breaks past this high, then this one here is already a confirmed valid break of structure. You all know this. So, and that's the reason as to why you can clearly see that price consolidated in that trading range all the way towards breaking the external liquidity. So let me now zoom so that we can see, like, how price was consolidating, and you can clearly see the low also was maintained. This low, you can see price didn't didn't broke that low. It was protected and the price was consolidating in the range, you can see. And then finally price broke past our swing point, confirming that bullish break of structure. Then after that, of course, you can clearly see that price created this here. You can see that this here was the pullback. All right here there is something, let me show you. So there is that one, and right, that's a pullback of which price reversed this single candle and took out this pullback. But if you do remember, I said a perfect retracement, or like a good retracement needs to have at least 3 retracing candles. And also we can clearly see that even like this one candle, it's like didn't take like a lot of lows. We said at least it should be that big that it has retraced a significant length inside or deeper, like the depth needs to be very big. level that maybe like at 8.2, or maybe also something like checking lows like more than 5, like things like that may also validate even if the retracing candles are less than 3. But in this case, you can clearly see that it took only 2 lows, and also the retracing candle is only 1. So in this case, then this here cannot be considered to be a break of structure. I mean, this one. So like price did that, so price like did this, yeah, so this one here cannot be a valid break of structure. So in that case, that's a normal valid pullback. So this low shifts to this one, and then further price shifts to this next one, because you can clearly see that price created another valid pullback after this one. So this one here is the recent one, and this is the inducement. All right, then after the inducement, now once price has taken out the inducement, we all know the next step is usually marking the POIs, and yeah, that's where now we are interested at. So obviously, I said while marking the POIs, we start on the extreme of the trading range, and we can clearly see that the most, like the deepest low, you can clearly see it's not this, but this. You can see like this is the deepest low of this retracement, and so that's where the price, that's where the trading range starts. We all know that. So yeah, right here and obviously, when marking the POIs, we say that we start with the order flows. So, right, so right here you can clearly see this is the selling move before the rally up. So right now I can just do this, and yeah, so you can clearly see that, and it's already mitigated exactly right there. This one here was not a mitigation. All right, the price, like price mitigated it here, but not by this. All right, let me use this one so that you guys can see, like not by this one here, but by this one here. Yeah, so that's where the mitigation was, and then now after that, price created another order flow, which is this one, of which price has already mitigated it. And yeah, so this means that all of this now is where we are interested at. So this one, all of that, of which is already mitigated. So getting into this next one also mitigated. Then price, you can see price now closed below this order flow. So this means that now I will use the path until I get all right, let me, so right there you can see a path. So this means that all of these order flows that I've identified, they are all like invalid. So you can see that all the way here down. Then all right, so I will ignore these ones because they are all engulfed by this order flow. So I will just be going like that, and then price now came back, mitigated the order flow, this order flow, and then yeah, so all right, price did this and then did that. So in this case, we say that we just pick the whole move. So that high, all right, I will need to end it there because, all right, so right there. So this means that this is the order flow, which is already mitigated, and then price again closed below. So this here is a complex trading range, and you may encounter some things like this. All right, there is something interesting here. You can see this here, like price broke past that. So yeah, you can see exactly. So this means that there is a valid pullback here, and then price did that. Then another, there is a pullback here, a small pullback, and then finally we have got, yeah, this final. All right, I know there is these pullbacks, but I'm not interested in them. So then that, then this one, then now price getting here, a pullback, a pullback again. All right, is that a valid pullback? Yeah, so pullback and another pullback right here. All right, so exactly right here now I was to mark this one here to be the order flow, but then price, you can see what price did. It it mitigated it right there. Then price broke past this one here, because this here was supposed to be the one. Then price broke below it, and then I wanted to get the one that now will, like, mark the one that will now be aligning with the trend. Of course I cannot mark this one because it's not aligning with the trend. After price now does something like this, now that's when I will mark this one here. So this one here, you can see it's not even mitigated. So you can clearly see this is not mitigated, all of that move. Then coming up to this one, let me just use the brush. You can see this order flow is mitigated, this order flow is mitigated, 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 and then now the one that is not mitigated, let me show you here. You can see right here there is this pullback, and price literally did that. Yeah, now after that we all know that there is no any other order flow above that. All those order flows, they are mitigated, and this one here we usually ignore that. So you can see now this one here is also live, and it's unmitigated. So this one here is the order flow that we'll be using as the decisional, because this one here is the minor inducement. So now we can clearly see that we only have two valid order flows, and this is great. Even though it took us some time to figure out how to mark this. I know this would have been a problem for most of you, and yeah, if you think like you will make some problem, if you doubt the way that you're marking the order flow in such complex trading ranges, I would just recommend you to just go into another pair. Yeah. So right here we said that if the extreme order flow, yeah, this is very important. So if the extreme order flow created, it's not on the extreme of the range, this means that these trading ranges that we are on the extreme, they have order blocks, and those order blocks, they are valid. But in that case, we should not, like, we don't consider them first until the order flows have failed. So this means now I'll right here, obviously I will start from the extreme. So if this extreme order flow now fails, that's when now I'll be looking forward for these order blocks. And I said that the order block that I'll be looking forward for is the one that is on the extreme, and it's unmitigated. So, all right, on this, you can clearly see where the valid extreme order flow is. And also, we can clearly see that from the extreme, we can get this, we get this order block of which it was mitigated here. Again, now, obviously, I cannot be marking these ones because price, you can see, retraced all the way. Of course, these order flows, they were just like, you know what, they were all now invalid. So coming up to this one here, we can clearly see that there is this order block, and any other order block here, maybe this one here, of which price has already mitigated it. So I will not be considering that. We said we only consider the one that is unmitigated, and I don't see any other order flow. I mean any other order block. So this means that if this extreme order flow fails, I will now be looking like my last zone to take the reversal from is this order block. But this order block is a secondary option. This one here is the primary option. So this here is the high probability reversal. So you can see price what is doing there. So you can see literally what price is doing there. And yeah, so not until price now decides to fail this order flow and break past that, then I'll be looking forward to take the entry on this order block, because the primary option is still there and it's still live. Yeah, you can clearly see that the extreme order flow is well and breathing. So right here, after that, now that's when now you check for the reversal patterns, so that you can get where to enter, because this one is a direct entry. So exactly right here, all right, from the decision of POI, you can clearly see that this here was the decision of POI. Of course, today, I know today it's about the extreme POI, but it's good also to monitor this, because uh, we have covered this. So it wouldn't be any issue for me to cover this. All right, so right here you can clearly see that price was coming into the range with a big selling candle, and then after that, so this big selling candle was indicating that the sellers were dominating in the market. And after that, now after mitigating the decisional, you can see price here. You can see price created this what we call the hammer, showcasing some introduce like they showcasing that there is some buyers that have stepped in into the market. So right here in this zone, you can see the buying momentum now is getting serious. And then after that, now I was to wait for a bullish candle with good momentum so that now I can get that reversal or that good reversal. A good momentum, of course, we know how our morning star is formed. So after that doji, we need to see that we need to see a break past this bearish candle that completes. I mean this bearish candle body that completes the evening star. So if we get a break past the 50%, not like not like the full now. I mean just a 50% of it. So you can see where did our evening star like so exactly right here on this candle that yeah, exactly right there on that candle. And we say the stop loss is just a few pips below. And then after that, then of course you'll be targeting this high. So you can see price was going into a direction until it decided to stop. So how you can see price did that, gave us a good reaction, and then price failed the zone. We say that the decision of POI can either, like it's a 50-50 zone, it can work and sometimes fail. All right, so after that phase, of course, the next part is obviously the engineering liquidity or the extreme POI. So in that case, now where is our engineering liquidity? We said the engineering liquidity is the all right. I was to start with the inducement, right? But we can clearly see that price just broke past the inducement with a big selling momentum. There was no any indication of a sweep there, so everything was good with that. So let's get back into the engineering liquidity. We said that when the decisional POI fails, we now left with the extreme POI mitigation and the decisional POI, I mean the engineering liquidity sweep. So right here you can clearly see the engineering liquidity is exactly on this sell side liquidity. So exactly right here, extending this line to that part. Right, so exactly right there. You can clearly see that right, this here was not a sweep actually, because yeah, that's not a sweep. So engineering liquidity is not also like in that case, the engineering liquidity was not valid. Like this was not a valid sweep. So I cannot consider this one here to be a correct reversal. So in that case, I will only be left with the extreme order flow as the part where I'll be taking the reversal from. So you can see that this here is the engineering liquidity because this is the valid pullback that is right before the extreme PY. Take note on that. So exactly right here after price has mitigated the extreme PY, you can see the first mitigation was right here. So that's where the first mitigation was, exactly right there. And I said that morning star pattern. You said that we will be looking at these patterns, morning star pattern, evening star patterns, and right here we can clearly see that. Right. So this year price was actually coming into the zone with a good, like the sellers were having like the sellers were the ones that were dominating. I mean the selling pressure was very strong, and then after price mitigated the extreme order flow, you can see some introduction of buyers and yeah, some buying pressure or some buying momentum, and price created this dragonfly doji. After this big selling candle, price created this what we call the dragonfly doji, indicating some buying pressure because of this long wick rejecting the lower prices. And then after that, price created, we say that we don't sell immediately after this hammer or this dragonfly doji or after the doji. No, we wait for a bullish candle to confirm that momentum. There might be an introduction of the buyers, but we still need momentum. So that momentum is the one that gets us going. And if that momentum is enough, then price will make the ultimate reversal. If that's momentum not enough, then price may decide to go deeper and find more momentum, like in this case. And then after this, you can see price is actually reacting pretty good. So you can see in this case, we said, all right, I didn't covered on these reversal patterns, but I believe on the next class, yeah, I think our next class will now be on these reversal patterns. And obviously, my favorite, morning star, evening star, these hammers, the pin bars, of course, the bearish harami, but the bearish harami need to be also like combined with the evening and the morning, like all of that. We'll be covering all that on our next session. But let me just give a quick recap here. You can clearly see that yeah, this candle. So I usually to confirm like a valid morning star, you should take this candle that was formed before the doji and mark from the start of that candle all the way to this high of this candle. Like the notice that I'm not marking the wicks, I'm marking only the body. And you need to see a body closure past the 50% of this candle so that you can confirm that morning star, just like I did on the decision of POI, exactly right here. I confirmed there, and you can see I took the buy immediately after price closed 50% of this selling candle. So the same thing here, you can see that price was like price didn't close like past the 50% of this selling candle. So in this case, our morning star is still yet invalid. So like it's still yet valid. So means that the morning star is invalid and we cannot take that entry. And now I will be looking forward for a good reversal that will now confirm that that entry. And exactly right here, you can clearly see that price created this good buying candle, and that's where now my buying will be from. So exactly on this, after the closure of that candle, stop loss a few pips below the reaction, and of course I'll be aiming the external liquidity, and we can clearly see that the external liquidity is exactly right there. So you can see that will be a very nice risk to reward. You can see that a 6 RR, that's a good trade. But for me, I cannot be waiting for all those days, because you can see this is a day. This means this can take months for it to achieve here. Yeah, it may take months, because how many candles do you think here? I mean, each candle takes 24 hours, and you can just guess the number of candles that it will take for price to achieve towards this external liquidity. Yeah, a lot. So this means it will take months, if not nearly a year, for price to reach exactly there, especially if it decides to consolidate. That's even worse. Right, so exactly right here we can see. All right, now this now will be the top down. All right, so I have covered about that and the reversal patterns. I said I will be talking more about the reversal patterns tomorrow, but if you were to take the entry from this, he said that it will be from that zone all the way to, yeah, stop loss below there and targeting that external liquidity. All right, now this is the daily, so I'll be shifting to the 4 hour, because price has mitigated our higher time frame zone. So shifting to the 4 hour, we can clearly see that if you have been watching my videos, you know that once price mitigates a POI, when you shift to the lower time frame, that inducement changes its role. I mean, that lower time frame inducement changes its role from being an inducement to being a change of character. I want to believe that each and every one of you knows that. Yeah, just wanting to believe that. All right, so you can see that this one here is not a valid pullback, and we said we don't mark inducement on invalid pullbacks. So that's the reason as to why I picked this one here to be the inducement. We can clearly see this here is not a valid pullback, and so I cannot mark that to be the order block. I mean, not the order block, I mean the major inducement. So that's the reason as to why I picked this valid pullback. All right, so yeah, let me wrap that and just be left with the correct one. And then after that, you can see price gave that created valid pullbacks here. All right, this one here is not a valid pullback, but luckily price created this. So price took out the inducement exactly there, and price, you can see, retraced all the way to mitigating this extreme PY. So after this, taking out of right here there is something interesting. This one here is a valid pullback. You can see this one here is a valid pullback, but the retracing candles, you can see like we need body closures like three retracing candles. So this one here is not a strong, I mean a strong break of structure, or like, yeah, in that case I will not be considering that as a break of structure, because the retracing candles are less than three, and also this retracement also is very small. Yeah, things like that. Then this one here is now the, yeah, you can see price took out. I said that it doesn't matter. It can also be a break by a week to confirm the valid pullback. So this one here is the inducement. The inducement is taken out. Then after that, we can clearly see that we are left with the order flows, right? Yeah, because this one here is the order flow, exactly right here. And this order flow is not mitigated. So there's this order flow, and I cannot see any other order flow, so I will be waiting for price to mitigate this order flow, and price mitigated the order flow right here. It gave that reaction, and of course if I were to take the direct entry, I will take I will like the direct entry would have been valid from that point, and of course be targeting this, or by since this here is a lower time frame execution, maybe I'll just place my cell below there for safety, and then of course target the daily if I am to use the 4 hours, my lower time frame. I mean, if I was to use the lower time frame execution, and obviously target the daily as the daily external liquidity. But for, if let's say I was just into the 4 hour, I will of course place my SL at a reasonable place because of the risk to reward and stuff. So you can see this one here needs to be here, and stop loss we said below there. So exactly right there. And if I am to target a high, then of course I'll be targeting this one here, and you can see that will give me a small risk to reward. So this means that in this case I will not be, or maybe I will extend this one here to make it a 1:2, but it will not be worth it. Anyways, you can see we said that once the extreme POI fails, you can see the extreme POI rejection failed. The second rejection was from this part, it also failed, and then now the final rejection was right here, and this rejection you can see it's making the wonders. So exactly the first one was right here after, like immediately on its first tap, which was exactly right there. Immediately on its first tap, price gave that reaction exactly right here. Price gave that reaction, and we said stop loss below. So if you had placed it somewhere there, stopped out. But if you had done like something like this below that, I mean at the low of this POI, then you will still be in the trade. So you can see that's how it is. You can see this the POI. If the POI is an order flow, there is a higher chances that the first rejection will not work, or maybe like you don't know, the first rejection can work or may not work, and then price may decide to make the rejection. As long as it's inside the order flow, price will be making a lot of rejection inside there. So it doesn't matter like how many price makes. All right, but it's upon you. It's upon you. If you get stopped out with the first one, I will just recommend you to not take any other from that part, because there's still some chances that you may still get another one. That's the reason as to why if you are to take a direct entry, I usually recommend from an order block. Order flow is a very bigger zone. Not until the order flow is a small zone, but if it's a bigger zone, then I wouldn't recommend. So you can see right here after that, then our buy of course will be somewhere here, and stop loss of course somewhere below here, and targeting all the way this high. But still, for me, I usually don't do that. All right, the reason is to why I placed my stop loss exactly there. I showcased that this selling candle 50%, the candle that breaks past 50% of this body, exactly, yeah, that's the part. So the 50% candle exactly here. So in fact it was supposed to be this one, that one, yeah, that's then stop loss, of course, some few pips below here, and then targeting all the way this all the way up here. That's a 1:4. That's a good risk to reward. So still I'm not doing that. So after the mitigation of this extreme PY, I still shift to the 15 minute for some more and more and more rejections, you can see. So that's how like I do the top down and stuff. So right here you can see like this is the part, and same here. I usually ignore the first one, so I usually take the second one. The first one is because of I don't know if price will reverse, all of that, so I usually wait for the inducement to be taken out and take the second range. So right here, where is the inducement? Right there was no inducement until here. So you can see this here is the inducement was taken out, and then price made this break of structure. And if you do remember, I shared this setup also on the trading channel. I mean, yeah, on my channel, my Telegram channel, and I took the entry from this. There was some order, but I was using the traders. I mean, the fusion markets broker, and there was some kind of order block here, right? But anyway, that doesn't matter because we can clearly see that in this case it will be a reaction from a rejection block. So exactly right here, that's our rejection block, and price mitigated the rejection block. So right here I took the entry from this part, but also even after this mitigation I didn't take the entry like directly based off the reversal patterns. But if I did, exactly, you can see that the entry would have been after this. I don't know if this is the piercing line or if this is the, and it has a pattern, like this pattern has a name. So of course, to be safer, stop loss below this order block, and of course target this high. But you can see like price ended up like some few pips before like this external liquidity, but then made that reverse all the way towards my SL. You can see like the distance was insane right here, exactly right there. You can see just a small distance, and then price made all that reversal. That trade was kind of painful. Like that kind of a loss was painful, even though, yeah, it was painful. There's nothing like even though here. So yeah, right here you can see like I didn't take the direct entry like I showcased here. I also shifted to the lower time frame, that is the 3 minute, and that's where I took the entry. So probably my entry was after this sweep. So it was somewhere here after this sweep. So that's where my entry was. And I think in this case, it gave me some good risk to reward, something like a 1:5 here. So after this sweep on the 3 minute, that is, you will get this information better when you shift to the 3 minutes. Just that when I shift to the 3 minute, it will bring me back like way back that I will have to zoom and zoom until I get the perfect part. But anyway, we still have good time, so let me do that. So you can see what I'm doing actually. So where's the 3 minutes? You can see now, this is what I was talking about. All right, so exactly right here, you can see that's the 3 minutes. And yeah, my entry was after this. Right, so exactly right here, you can see price made that change of character exactly right there. And you can see this one here was the inducement, because here there was no any valid pullback. So right after this inducement, I took my entry exactly here after this, that, and my stop loss, of course, I usually set my stop loss exactly right there, and I targeted that 15-minute whatever, I mean the 15-minute external liquidity. So price was going all the way insanely. I believe I got something like a 1:5 or something here. So this is the part here. So yeah, 1 is to 5. You can see a very nice trade exactly right there. You can see how price like made a good exactly like, all right, let me zoom so that I can get the full. So exactly right, you can see how price like traveled this deep. You can see just a small distance to full TP and then price reversed all the way to my SL. This was kind of very like, it was hurting. But anyway, this is just a loss like any other. I took it like a loss like any other. I know some of you may advise like taking off partials and all stuff, but I usually don't do that. I usually set and forget. So you can see that a small distance led me to lose like like a trade that had a good risk reward of 1 is to 5. So this trade I shared it, but then I made a joke there about this trade because this was funny, like very funny. How can you just be like some small pips to the 40p and then make some kind of insane reversal with no any meaningful explanation about it? So you can see then, yeah, that's how I've just given out my full top down analysis, how I do trade and everything. You guys have just gotten everything, like my full, like full without hiding anything, like from where I start to how I got the entry. You're lucky. So yeah, that's how I do my top-down analysis from the daily until the 15-minute. So you can see my next entry was right here, but I didn't take this entry because I was asleep. You can see after the major inducement here, you can see the next entry was supposed to be after the closure of that candle, then stop loss below here, and then obviously targeting there. So in this case, it will give me a small risk to reward. In this case, I cannot wait for a lower time frame confirmation because of, you know what I mean. You can see the way the trading range is messy and stuff. So this is a 1 is to 2. It's not a bad risk to reward, but I usually recommend a risk to reward that is at least 1 is to 2.5, 1 is to 3, and all of that. So guys, I believe I can end the class here. I believe you guys have learned a lot on this session. And tomorrow I will be covering the reversal patterns, and also we'll be diving deeper into the top-down analysis. I know that's where most of you are actually waiting. And yeah, so right now I am ready for any questions.